on and talk about what's happening in the US markets and how they managed to close. So yes, Dow Jones, S&P 500, Nasdaq, all of them managing to see good gains coming in last night's trade. Dow Jones up more than 1.7%, S&P 500 up more than 2%, Nasdaq up more than 2%, almost 3% uptick that's come in for Nasdaq. So yes, that's what we're watching out for. Where the gains came in for the US markets, stocks and industry sectors, you could say, was technology, healthcare and industrial. Those sectors actually managed to see very, very good gains and strong gains that came in on that front. Other than that, for Dow Jones, Amgen Inc., that saw a gain of almost 3-4% in trade. We had Salesforce, which saw a gain of 3-4% in trade as well. While the worst performers came in from Walt Disney, which didn't do much in trade, keeping an eye out on that, and Coca-Cola also not much, just a muted day of trade that came in for Coca-Cola. So yes, keeping an eye out on that. While in terms of Nasdaq, also a strong performance came in from that IT side, so keeping an eye out on that one. Top performers for Nasdaq were Sunshine Biopharma, we had Harrow Health, as well as Digital Turbine, which managed to see good gains. So yes, all in all, US managed to see good gains coming in. Now stock, when you're looking at S&P 500 futures as of now as well, remained a little unchanged, because yesterday we've seen a very sharp run up coming in, indication coming in even for the Nifty implied open, gain of almost 0.9%. But even yesterday it was a positive start, then we gave up those gains, a bit of an up and down that we saw in the Indian markets. Where does it head today? That's what we're keeping an eye on, because second half of the day, normally we've started seeing that bit of a fall coming in for the markets in the last few trading sessions. Does that happen for the Nifty today as well? Let's watch out for that. But S&P 500 futures near the flat line, and everyone's keeping an eye out on what more updates we get on the global front. European markets, let's talk about that as well. Given that the read-through came in from the US market was a bit positive, European markets closed a bit earlier. DAX managed to close with gains of almost 0.4%. FTSE was a bit muted, a slight bit of a negative decline. So we could call a European market as a mixed close that came in. All eyes on the global front as well as Indian markets. As of now, Nifty implied open inching towards that 1% mark.
Absolutely. With that, let's also take a look at what's been happening in the world of commodities. Let's start by taking a look at what oil is up to, and WTI as of now at $76.16 per barrel, so above that 75 mark. You have Brent also, that is at 79.1, just below that $80 per barrel mark. So keep a close eye on how these two, WTI as well as Brent, which direction they go in today. But let's also take a deeper look at what's been happening with the world of crude and oil. Now, US crude oil futures rose more than 1% last night to top that $76 per barrel mark. Like I told you, two reasons for this. You have positive labor data that came in from the US. We'll be telling you about that as well. And that eased fears of any recession. At least that is what one half of or one school of thinking on Wall Street believes. And the second reason that boosted oil prices yesterday was that Middle East tensions seem to be simmering. Yesterday we've not heard of any adverse developments, at least coming in on the Middle Eastern front. And you also have WTI that bounced back and recovered after crude inventories fell for a sixth straight week. So that was something that worked out for oil and crude prices. Now the oil market is waiting to see whether Iran will follow through on its threat to strike Israel after the assassination of Hamas leader Ismail Haniyeh in Tehran last week. However, Iran has also said they do not wish to retaliate in a violent way. They will retaliate for sure, but not by inciting any violence, and they want to maintain peace in the area. At least that is what Iran and Iran officials have said as of now. So lots to watch out for. In fact, you have the gasoline September contract also is up almost 2% year to date. Remember, gasoline is up 14%. Natural gas also as of now is up 0.7%. Not much happening, but year to date, on the flip side, natural gas is down 15.5%. So two other important metrics to watch out for. And remember, several international airlines have cancelled flights to Israel as tensions in the region simmer. So oil continues to be a story about geopolitical risk as of now, and that's basically everything that's been happening in the world of oil and crude. Let's quickly shift focus, take a look at what gold is doing as of now, and rather flat. In fact, it has just inched into the positive territory, but very flat with a slight positive bias at $2,463.8 per ounce is where gold is as of now. And cryptocurrency, well, let me draw your attention Over there as well, you have Bitcoin that's up 12% as of now, a $6,600 uptick coming in Bitcoin as of now, just above that near that $61,500 mark. You have Ether also that is up more than 13.5%, so $320 uptick coming in on that front as well. So well, everything seems to be cheerful this morning, especially after the US handover that came in. Implied open also indicating the same. Let's just wait and watch what happens for our markets this morning, Vinny.
Absolutely, but let's move on and talk about why the US market was buzzing in trade today. We had the US jobless claims data that came in for the week. Last week, it spooked the markets, and here's a relief coming in for Wall Street. Weekly jobless claims fell by 233,000, more than expected. A positive sign for the labor market, and despite the concerns of the slowing economy. Now, initial claims for unemployment totaled less than expected last week, countering other signs that the labor market is weakening. However, the 4-week average is the highest that one has seen nearly in a year, but at least some relief on a weekly basis that we're seeing.
If you like this video, then like, share and subscribe to ET Now.